Welcome to The Explainer. Today, we're going to put on our detective hats because boy, do we have a fascinating market mystery to solve.
So get this, how on earth does a company's profit just collapse? I mean, totally collapse, by 99%. It's a crazy number, right? Well, that's the central question we're digging into today.
Only to see its stocks suddenly start soaring again? I mean, it makes you wonder, doesn't it? This is the wild story of a company called Tatva Chintan. And our job today is to figure out what's really going on. Is this a classic value trap, or are we looking at a genuine, honest-to-goodness turnaround?
All right, let's get into the case file. First up, we need to look at the core of this whole mystery, that absolutely shocking collapse in their profits. I mean, this is what put the company on everyone's radar, and definitely not in a good way.
Okay, just look at these numbers. The scale of this collapse is just staggering. The company's profit after tax, their PAT, it went from a pretty healthy 96 crores in FY22 down to basically zero just a couple of years later. We're not talking about a small dip here, folks. This was a complete and total wipeout of their profitability. But you know, just when things looked about as bad as they could get, the plot took a turn. The numbers, well, they started telling a completely different story. A story of a really powerful recovery.
And wow, what a comeback it's been. It's a classic V-shaped recovery. I mean, just to put this into perspective for you, after making next to nothing for an entire year, the company just roared back. They booked over 31 crores in profit in just the first 9 months of the next year. That is a serious turnaround.
So you got to ask, where's all this coming from, right? Well, the company's revenue is split across 4 main areas, but 2 of them are the real heavy hitters, something called structured directing agents, or SDAs for short, and then pharma and agrochemicals, or PASC. These 2 together, they make up almost 70% of the entire business.
And here it is. This is the smoking gun, right from the management themselves. Their SDA segment, the revenue there just exploded. It grew by 132%. And the reason? New, much stricter emission standards in Europe, called Euro 7. So basically, these rules mean cars need special chemicals called zeolites. Think of them like tiny little sponges in the car's exhaust that trap all the bad stuff. And guess what? Tatva Chintan is a key supplier. So this isn't just some temporary bounce. Nope. This is a brand new, long-term driver for demand.
Okay, but any good detective knows you have to look beyond the obvious clues, right? You can't just look at the profit and loss. When a company goes through a nosedive like this one, its real financial foundation gets put to the test. And when we start digging into Tatva Chintan's balance sheet, we find something hidden. And honestly, it's a pretty surprising strength.
So the first big clue to this strength is this little number, 0.05. Now, that's their debt-to-equity ratio. For a manufacturing company, especially one that just survived a massive downturn, being practically debt-free, that's almost unheard of. It's a huge deal. It means they can handle tough times and still invest in growth without getting squeezed by huge loan payments.
Clue number 2. The founders, what we call the promoters here in India, have some serious skin in the game. I mean, they own a massive 72% of the company. Think about that. It means their interests are perfectly 100% aligned with all the other shareholders. When the company does well, they do really well.
And this one, this might just be the most important clue of all. The number is 0. That's how many of their own shares they've pledged as collateral for loans. You know, when owners start doing that, it can be a major red flag that they're in some kind of financial trouble. So seeing a 0 here, that's about the strongest sign of confidence you can get.
And it's not just us saying this, financial health models totally back this up. There's this thing called the Altman Z-score. It's a pretty famous formula for predicting if a company might go bankrupt. Tatva Chintan gets a score of almost 30. Now, just for context, anything over 2.6 is considered safe, so a score of 30 isn't just safe, it's practically bulletproof. And a big reason for that is their lack of debt. Okay, but here comes the twist in the story. This incredible turnaround, that fortress of a balance sheet, well, it's not exactly a secret. And the market seems to know all about it. And that, my friends, brings us to the catch. The valuation of this stock, it's eye-wateringly high. It's trading at almost 79 times its earnings. Let me break that down. That means investors are willing to pay 79 rupees for every single rupee of profit the company is making right now. What that tells you is that the current price is based on absolutely massive expectations for future growth, not what's happening today. And this table here, with analyst estimates, really puts that risk into perspective.
The stock is currently trading around 1,180 rupees. But look at the bear case scenario. That's if the recovery kind of stalls out. It suggests the price could drop to between 700 and 900 rupees. That's a potential downside of 20 to 40%. So that really high valuation, it leaves very, very little room for anything to go wrong.
So this all leads to the big, all-important question. What exactly is the market pricing in? What kind of insane future performance is everyone expecting to justify paying such a high price today? What has to go perfectly right for this investment to actually work out?
When you boil it all down, the current stock price is basically pricing in perfection. It's a huge bet. A bet that the company will pull off a flawless recovery, that they'll get their profit margins right back up, and that they'll get their massive new production facilities running at full steam. Anything less than perfect, and there could be a problem.
So, okay, we've reviewed all the evidence, we've seen the dramatic collapse, the impressive recovery, that fortress of a balance sheet, and that sky-high valuation. So, what's the final verdict here on the Tatva Chintan case?
Well, the evidence is pretty clear. A genuine, credible turnaround is definitely in progress, and it's backed by one of the strongest balance sheets you're ever likely to find. But, and this is a huge but, that high valuation is the single biggest risk on the table. It means this is an absolutely fascinating story to follow, to keep on your watch list, but at these prices, it's not a blind buy. There is just no margin for error.
And you know what's great is that this whole investigation gives us a really simple framework that you can use for any potential turnaround stock you're looking at. Step 1, investigate the story. What's the P&L telling you? Step 2, examine the foundation. Is the balance sheet healthy? Step 3, analyze the risk. What's the valuation look like? And only after you've done all that should you form your own verdict.
Now, before we wrap up, a quick but really important disclaimer. The analysis I've shared here is purely for educational and informational purposes. I want to be super clear. I am not a SEBI-registered research analyst or investment advisor.
Look, investing in the stock market has significant risks. All the data and the charts you've seen are based on public information and my own personal research. So please, please do not treat this as a recommendation to buy or sell anything. You should always do your own due diligence, or even better, talk to a SEBI-registered professional before making any financial decisions.
All right, if you found this deep dive helpful and you want to stay updated with more stress-free investing analysis just like this, please go ahead and hit that subscribe button. And press the little bell icon too, so you never miss an update. And hey, I really want to hear from you. Which Indian-listed company should I put under the microscope next? Drop the stock name in the comments below, and who knows, it might just be the subject of our next explainer. Thank you so much for watching, and as always, keep your investing stress-free.